Well, Woolworths is to bite the bullet on its electronics chain, Dick Smith, announcing it will close 100 stores and sell the rest. It's a move which has been welcomed by investors on a day when Woolies also revealed it had missed its sales forecasts in its biggest division, food and liquor. Here's Andrew Robertson.
Strong competition and falling prices of consumer electronics have made Dick Smith a drag on Woolworths' earnings for some time. Even though sales improved in the most recent quarter, Woolies has decided enough is enough.
Was that Woolworths' main strengths are in primary, large format, multi-channel, high volume retail segments with market-leading positions.
Something Dick Smith isn't anymore, which is why 100 stores will be closed and the other 220 put up for sale. However, retail analyst Rob Lake believes that may be easier said than done.
If they can't get a satisfactory buyer, it may be that they take the solution that Coles took with World for Kids and absorbed it into Kmart. And we may well see Dick Smith appearing as a brand within the Big W label, for instance.
Woolworths bought Dick Smith Electronics from its founder, Australia's most famous helicopter pilot, 30 years ago. The retail landscape has changed dramatically since then, and Rob Lake says Dick Smith has lost its way.
Woolworths hasn't either allowed it or the leadership of Dick Smith hasn't kept up with market trends in the way that other retailers have. JB Hi-Fi were very quick to get into iPhones and computers, where Dick Smith seemed to lag in those areas.
Look, while the announcement of the sale of Dick Smith solves one problem for Woolworths, of bigger concern to investors is the performance of its largest division, food and liquor. Sales from stores open more than 12 months were up just 1.5%, which, when inflation is taken into account, was a fall. In fact, deflation or falling food prices, while great for customers, has been a major issue.
That figure was minus 13% in December, and I suspect is going to be a little more than that for January as the prices continue to fall across the market.
And the battleground in food is only going to get tougher, with Coles announcing it'll slash the price of selected fruit and vegetables by up to 50%. If history is a guide, Woolworths will retaliate, and not surprisingly, growers are concerned about being dragged into a battle that began a year ago with milk and bread.
We want to see the long-term sustainability of these sorts of discounts. We worry about growers being in a position where they have to sell below their cost of production, a worry on sales and just volume to be able to make ends meet.
While that may be bad for growers, analysts like Rob Lake say it's also bad for Woolworths because it's another example of Coles now leading the way.